I've been in this industry now for close to coming up to 9 years, right? And that's just trading. Being a part of Iron Mastery Academy came about last year. A couple of conversations came about, and it was obviously the right decision. We can see how much momentum the company is, well, kind of really thriving in at the moment. So I appreciate you all for jumping on the call tonight. I am going to just obviously maybe briefly dive into different elements based upon maybe trading techniques, but also just to open your eyes maybe onto different situations that you might not be aware of going on in the market. Okay, so within the Steady platform, myself, my partner, kind of Justin Saney, I've got Mauricio on board as well. I've got a Spanish educator in Arelis as well. We really thrive on the ability to actually educate you guys on exactly how to do it. I always talk about that I'm not here to create professional signal takers. That is the last thing that I want as a legacy within this industry. I'm here to create self-sufficient and independent Forex analysts and Forex traders, and that's for you to go ahead and utilize the information that we do give to you guys, to then go utilize it and regurgitate that information, implement that information, and then start to see the success within the industry. Now, I will tell you that trading doesn't happen overnight. Okay, it's coming into 9 years, and I still don't even classify myself as a full-time professional trader. I think you need 20 odd years in this game. However, what we do on the platform, and what you do have the ability to have on this platform, is the amount of value that's provided for within any form of Forex industry. There is nothing quite like the Go Live session. There is nothing quite like the multiple array of products. It doesn't have to be Steady. It can be anything that you like to utilize on. They all work over a period of time, and therefore, if you just kind of set your stone or set yourself in a place where you say, right, I'm going to allow this to happen over the next 2 to 3 months, you will start to see some consistency in what you're doing. So I appreciate you guys having me on. I'm just going to go quickly share my screen. Let's just make sure everybody can see the screen. Okay. Share the screen. Perfect. Now, I know there's been a lot of new guys into the platform, which is fantastic. Okay, which is fantastic. There's a lot of new blood into the system, which is perfect, which is why we're all here, right? We're all here to kind of utilize the trading platform as best as we can. And this is where, if you're not aware of what we do, this might be a good opportunity just to kind of enlighten you on different scenarios that happen in the market. Okay. Whether it's the Steady platform itself, we obviously do offer trade ideas and market execution ideas. We are probably not as regular as some of the other products out there because we come from a different stance. We come from a potential swing trading element. Now, when I say swing trading, that doesn't mean that I want you to sit in something for weeks and months on end. That is exactly the opposite of what we try and do. Okay, swing trading to us is about the element of risk to reward ratios. And I'm sure you've heard that time and time again, but it's so important because the reality in trading is you do not win every single trade. All right, that is the reality of trading. You're trading against a potential computerized system, an algorithmic state of a market condition, and you are human. There is human error, there is human emotion involved in the market. But what is important when you are trading is understanding that there is an element called risk to reward ratio and risk to reward profiling. And that is what we aim to do in regards to every single trade we look to have is often 1 to 3, 1 to 4, 1 to 5, so on and so forth. Every dollar that you're risking, we're looking to make $3 back. Every dollar that you're risking, we often look to make $6 or $7 back. And if you continue to risk that same parameter, trade after trade, day after day, week after week, what you will find is that you could have a 20% win ratio. You could have a 30% win ratio, and you could still be up 20, 40%, 30% for the entire month. Because it's so important. Because if you were to win at a 1 to 7, you would then have to lose another 7 trades just to be back at break even. And that is the element that we go for. We look for 3 or 4 setups within a week that will provide us a large amount of pips with the most minimal amount of risk possible. Okay, we've recently just relaunched the platform in itself, and you can see that we kind of on the platform here, we do have active, we have pending, we have closed. So anything that's currently active, currently pending, or currently closed, you will be able to click on the chart and you'll actually kind of bring it up, and then you'll be able to apply it obviously on its own individual chart in here. Okay, so if you do look at something like the last trade that was sent out last week, unfortunately we didn't win one today, but that just drives me harder to win the next one tomorrow. So we can see that the Australian dollar, you get given obviously the entry opportunity, you get given the targets, you get given the stop losses, you get given the levels you should be looking to implement it on. From just simply looking at the risk to reward, you can see that this is going to be a substantial gain moving forward. Now, from that execution point, this was from last week, you can come back, flick onto whatever you're doing on your own charts, and we can see here on the 1 hour time frame, this was the exact movement that we were looking for over here. Okay, price spiked up, and then we had the expansion to the downside closing out for the week. And I actually am expecting further downside momentum. Now, that's the product side of things, but for us, I believe the most amount of value in all of this is the actual go live sessions and the education. Now, I am based in the UK. We are actually introducing live trading with you guys as well as the educational market ideas. So you will see us Tuesday, Wednesday, Thursday, live trading alongside of you. However, if you are newer to the market, if you have been diving through different ideas, different concepts, if you've been maybe even in the industry for a while and you have failed to be profitable just yet, I believe I have the key for you, and that is within my favorite sessions. I've created a complete video course series, absolutely part of everything that we do. And you can see within the session in here that we do have from lesson 1, lesson 2, lesson 3, 4, 5, all the way up to about lesson 8, but you have all the old lessons in here as well. And I truly believe there is nothing quite as valuable for the price that you're getting it at in the entire industry. And that's not me being big-headed, that's me having been in this industry for 9 years trading. Network marketing is an entirely different new world to me, but from a trading perspective, there is nothing quite like this. And it's really, really exciting. And there is so much success stories that come from obviously understanding this. And I pride myself on the ability to explain information which is able to be retained and therefore regurgitated onto the charts for you to apply it and become self-sufficient. So that's just kind of a quick update on who we are and what we offer on the platform in ourselves. Okay, moving forward, you can add it into the back chart. It's about 22 bucks, so on and so forth. Okay, so to get into the real value in terms of who we are and what we do. Now, I talk about having a trading plan. If you've been on a call with me, if you've been at an event with me, if you've been on the platform in itself, I always talk about that there are 7 steps in regards to entering the market. Because when we come to the market, there's sometimes an overruling feeling, right? Sometimes you're seeing all these indicators on a page. Sometimes there's a MACD, there's a moving average, there's trend lines, there's loads of horizontal lines, there's people screaming and shouting on a go live session. Whereas we prefer to believe that simplicity is key. Simple yet smart. So if you're writing anything down, the first 2 things I want you to write down is the fact that the market is only ever doing 2 things. Regardless of everything else that you've ever learned, the market is only doing 2 things. It's looking to seek and destroy. So it's looking to grab liquidity above highs, above lows, seeking areas of multiple high wick rejection ranges. It's looking to seek liquidity in order for the market to create enough liquidity to then move in the direction of buy. So seek and destroy is your first element. The second element is rebalancing. So if you come to the market every single day with those 2 concepts that you're looking for the market to either seek and destroy, how can I come and take a low? How can I come take a high? How can I come rebalance the market? I've created the entire blueprint just in those 2 different elements right there. You then have to step down into maybe 7 different steps to be able to implement what we look to do. Now, we talk about wave sequences, understanding of true support and resistance. Many of us might know typical support and resistance, but there's a deeper underlying understanding of what true support and resistance is, which you might not be aware of, okay? Price action. It's so important that price action is literally the language of the market. So you have to understand, not necessarily to execute, but you have to understand that the same way if you were trying to learn Spanish or English, or if you were blind and you had to touch that paper, or if you were deaf and you had to learn how to sign language, the shape, the size, the relationship from wick to body, the directional biases of those wicks, the amount of volume that's been created within a certain candlestick on a specific time frame is going to hold a high probability in regards to how dictating trend direction. The market is telling you what's happening day after day, week after week, and by simply understanding. And there's about 10 or 12 different candlesticks that we talk about, but I really thrive or pride myself on the fact that we talk about what it is, where it is, how to utilize it, what time frame to utilize it on, how we can then find entries upon it. So you get 5 different steps within those sequences. Step 4, we have to understand accumulation and distribution. Something, it might be a new concept to you guys. It might be a different concept to you guys. It's readily available information, but it's information that isn't easily accessible. Every move in the market begins from a period of consolidation. So if we could understand why something or how something is consolidating, then we can look to capitalize on the most optimal areas possible. And that's where we step into, obviously, maybe step 5, where we look at different Fibonacci ratio regions. Step 6, which is one of the most underrated piece of elements that there is out there, time and price. The market is consistently being delivered, okay? Very, very systematically. There is the amount of order flow that comes in at a specific time, and therefore there's certain times of market where it's most likely to print potentially the high or low of the day. So if we know that there's going to be a potential high or low of the day, then we can look to capitalize on that overall market for the rest of the day. Step 7 is going to be the funky stuff, the order flow, the manipulation, and understanding different stylistic ways to potentially find entries. And this is obviously broken down into each different lesson. You can start to see each different individual element that goes into all of this kind of steady content moving forward. And then breaking that down, you'll have the strategy 1, strategy 2, strategy 3, and strategy 4, so on and so forth. Okay, so if I just kind of bring this up, and we're going to go back and forth and try to find examples on pages, and then obviously in terms of what we've just been talking about. So let me bring this down. If anybody was plugged into kind of market mastery, the Chris Terry session, you'll probably seen this thing here. So we've just broken down, obviously, the different 7 steps that we were talking about. Okay, now very, very simply, okay, step 1 is identifying where you are within relationship to the trend. It's so important to build a narrative. Whether you're trying to trade the 5-minute time frame, the daily time frame, the monthly time frame, the 1-minute time frame, you have to have a narrative in mind to be able to then establish where should I be finding entries and executions for that. So step 1 is always about identifying where we are in relationship to the trend. And yes, of course, this is simplistic technical analysis right here, but we're always looking to dictate where the market is trying to create highs and higher lows. When we are in buying opportunities, we only want to look for opportunities at the lowest point. A side note, something that changed my whole entire trading was the concept and understanding that I should come to the market every single day thinking, can I buy lower and can I sell higher? I promise you, that alone changed my entire trading mindset in regards to, do I want to wait for this whole 4-hour candle? Do I want to wait for this whole 1-hour candle? No, what you'll often find is if you do come onto the steady platform, or whether you just utilize the information for your own trading, you'll be catching the very top of trends. And by the time everybody else is getting in, you're already break even, or you're already 1 to 2, 1 to 3, 1 to 4 up in terms of risk to reward ratioing. Okay? So really, really important. Come to the mindset every day. Seek and destroy, rebalancing. That's the only 2 things that the market's trying to do. Step 2, can I buy lower and can I sell higher? There is always retracements going on within the market. And therefore, when identifying an uptrend, you will be creating higher highs and higher lows. And therefore, you're always looking for that higher low situation to be established. For anyone who's definitely writing notes, you'll often find that the power of 3 is the highest probability of trade execution. So 1 wave, 2 wave establishes the trend. You attack it on the 3rd attempt, you're looking at a potential of around 80% probability of that becoming the next wave to the upside. Now, from an uptrend, you've obviously got the downtrend point. You're looking for a very, very similar situation to the market pushing lower. Every time you get to the lowest point, you're then expecting that pullback. And it's at that pullback region that we look to utilize some of the smart, the kind of smart concepts in terms of what we're trying to do to find the entry into that next impulsive leg. Another side tip when you're looking at this directional bias of trend, often if you've moved this amount of pips in your first initial leg, that can then be utilized as a target process for your second leg. The same way that if we moved from this high to this low, that can then be utilized as a target process for your third leg. If the market continuously looks to move in legs, if it's moved this amount of pips in here, it will often duplicate that upon its next movement. Okay, it's very, very fractal. The market is consistently repeating it, and that is essentially all that technical analysis is. Something that's happened in the past, and therefore we can take that information, back test that information, and see how that has a high probability of playing out again because it's happened in the past. So step one, we're identifying where we are in relationship to the trend. Step two, true support and resistance. Now, again, please don't feel as though you have to grab all of this concept right now. That is what study is there for you to do. But there's two different elements to this. Now, price is always being built around key psychological price points. Zeros, 25s, 50s, 75s. Yes, there's going to be fluctuations around those levels because that's just what liquidity is. However, every single move begins from a whole number. There's no need to get into it right now, but you can just simply see that we can start implementing maybe a quarter theory element where you start dividing these things up every 1,000, every 500, every 250. And within an impulsive movement, you're looking for it to do around 250 pips of its first initial leg and barrier. True support and resistance. What I talked about in regards to rebalancing itself is that not just because there's been a high and we've attacked it a second time, maybe there's been a level that's been attacked previously, or the market's bounced from a floor, or it's rejected off of a ceiling as such. True support and resistance is understanding where the market has been traded inefficiently. Doesn't let that go over your head. When the market has been traded inefficiently, that becomes a magnetizing price level. The price gets drawn back to those levels. Why? Because it helps rebalance the market. It constantly has to be rebalanced. And this is where we can look to utilize areas, just as in this example, of where the low of this wick and the high of this wick, there was only one delivering of price to the downside. And as market continued to run lower, this, essentially a gap in price, became a region that we could look to kind of rebalance and look to find on a retracement type level. Step two, seek and destroy. Where was the liquidity above the high? Okay, so true support and resistance, we'll touch into it on maybe a few examples, but that's kind of what we're looking at. Step three, obviously price action. If any of you have kind of screenshots or anything that you want to do, you could be looking at a few different pieces of price action. Now, it's so important. I haven't put everything in on this PowerPoint here, but there's just going to be a few that obviously can correlate between what is a reversal point and what is just maybe a trend continuation. Well, in regards to this situation here, from spinning tops to double dojis to maybe the combination of them both, what's the storyline of price? Okay, the storyline of the prices. Now, it's not to find necessarily entries upon formations like this, or this, or this, or this, right? But what it is to do is to tell the story, to dictate the directional bias. How do we know that when we've made a high? How do we know when we've made a low? Well, the storyline of price is being blueprinted for us. Okay, you're getting a blueprint from simply the structure and the relationship of volume and wick to ratio where you are in relationship to the trend. So if you start to see opportunities like this, these really start to gear up to maybe where you can understand the top of the market, the bottom of the market, that liquidity is thinning, that buyers and sellers are somewhat equaling each other out. Okay, and therefore look to utilize that and use that information maybe onto step 4 with the accumulation distribution type phase. Okay, another great rejection candlestick, obviously looking for its form at the bottom, showing you a willingness that the buyers are looking to entertain into the market. Obviously in the reversal format, you're looking at this being pointed to the downside, showing you that there is a shadow of price. The wicks are indicating where there is a shadow of price has previously been, and we can see that price is pushed up and then the sellers have dominated the market to bring it back down. so on and so forth. Another reversal point is when we're looking for, obviously, maybe engulfing type candlesticks. Now I look for whether it's 100%, 100% plus, or an entire range. You're looking for these type of formations to occur. Why? Because that will indicate that we are ready for the next leg of the journey of the trend. Okay, now on steady in itself, there's maybe 8 or 10 that you have to learn, and I go through each different element for you to kind of grasp that concept and how to utilize that. Now, stage 4, we're talking about accumulation and distribution. This chart might seem confusing to some of you. Some of you might have seen this. Some of you might be using this information, and that's fantastic. Now, there's a few different elements that you need that aren't on this picture. You need to understand potential divergence. You need to understand potential volume, but that can all be taught over time. But if you understand that every single move begins from a period of consolidation. So what is a period of consolidation? A period of consolidation is anything that goes beyond 3 candlesticks. If you've got 3 candlesticks that are relatively making kind of equal highs and equal lows and we're moving sideways, doesn't matter the time frame because everything is fractal. What you can apply on the monthly is the same thing you can apply on the 1 minute. It doesn't matter as long as you understand what you're looking for. But within that 3 or 4, 5, 6, it doesn't matter, period of consolidation, what is happening within that market? Well, in this situation, in terms of accumulation, you're looking at the sellers starting to hedge themselves out of all the positions they had to the downside. And you start looking at the buyers being interested in wanting to take the market back to the upside. But we often work in a very manipulative way. We often work in a very manipulative market. And this is where understanding how we kind of have selling climaxes, secondary test, phase B, we'll often see this spring situation that clears all stop losses below. How many times have you been in a situation where prices run your stop loss, but then eventually gone in the overall direction that you've looked at? Okay, understanding some of this information might help you be like, okay, well, that's what it was trying to do before reversing back to the upside, or invertly reversing to the downside, so on and so forth. Just as a cheeky example, the best way for me to describe this, if this was looking confusing to you, is that you're looking for the market to relatively round itself off. If you start seeing the market kind of round itself off, you can start seeing that the selling climax has occurred. We then have a secondary test. And what this is doing is building liquidity. And what I mean by building liquidity is building enough volume or building enough order flow. Still with me? Building enough orders in regards to the buying market wanting to get back involved. And we can look to capitalize on, obviously, situations down here, so on and so forth. Change of structure, pullback, where was the price left open, retraced, rebalanced, and then rejected in terms of a mitigation point. Step 5, Fibonacci, something that we may be aware of. Now, it's not simply Fibonacci that moves the market. Fibonacci does not move the market. Fibonacci is, well, I mean, it is a numerical sequence. However, what we are doing is measuring the legs of the last impulsive movement that has occurred. Okay, so we're looking for significant A's, or the easiest way for me to explain how to utilize the fib is we are connecting swing points. If we know that the market's making a lower high and we've ran into a lower low, what's the next thing that you expect to occur? The retracement cycle. Now, there's some very important levels to be aware of, and without kind of taking up too much of your time, I always like to focus in between this kind of 71 and 88 point region. This is what we class as a premium or discounted range. And what I mean by that is that once we trade past 50%, now in technical terms, yes, we are measuring the high to this low, and 50% is halfway. But what does that actually mean in terms of an entire currency, $1 trillion a day, multi-trillion dollar a day industry? We've got to consider that as retail traders, 300,000 people in IML. That means absolutely nothing in terms of the amount of money that's flowing. I've literally seen myself a $1 billion order get placed. $1 billion order. So that's 1.1. I don't know how many lots people are trading if you're on MetaTrader or whatever platform that you're on. That's a 1.1 billion lot. All right, so 1.1. Some of us are working with 0.1. Some of us are working with 1 lot. Some are working with 10 lots, so on and so forth. 1.1 million lot. Okay, and I've literally seen that. So remember, no matter how much money we have in our accounts, you've got to understand the bigger picture. What's actually going on in this industry? So we can see that 50%, what does that mean? It means fair value. Okay, it means that currency, let's say euro against the US dollar. Once we start trading past the 50% of this impulsive leg to the downside, and we start pulling back, and we go beyond 50%, we've reached a point of equilibrium. Euro is now a fair value back against that US dollar, and the higher we start going, it means you're getting it at a better rate, and therefore the bigger players in the game are going to be wanting to trade back in alignment. Why? Because they're getting something at a discount, knowing that the price is likely to go further. Okay, simplest way I could potentially identify and explain fib in a short amount of time. All right, step 6, time and price. Really, really important. Now a majority of us are maybe based within kind of GMT timing, or maybe an hour or two behind or ahead, especially maybe if you're in Africa, maybe a couple of hours ahead. So important. Now, these are my specific times that I look for. Obviously, you might have to correlate them with British summertime as it is right now, but anywhere between 6:30 and 10 a.m., I'll be looking to find and execute upon a high or low of the day. Please don't let this bit go over your head. Why? Because London has the most amount of volume within the market. New York has the most amount of volatility in the market. Okay? So volume, the amount of orders that are being placed, where positions are starting to get hedged into the market. You will find the majority of that volume is being increased into London, and then you will see fluctuations and erratic behavior often go into New York, or continuations into New York. Now, there's very specific windows that we look to enter, and that might help your trading with the understanding of how to capitalize on those very, very specific kind of entry windows. Step 7, some of the funky stuff, different elements. I mean, I've worked with loads of different people. I've learned information from all different sources and mentors and educators, and I consistently search to become better, because I think if you stop learning, or if you think you know it all, that is the moment that you've almost failed. Right? That is my personal opinion. And I will always continue. If I hear bits of information there, I will look to see if I can capitalize on that. Nobody in the world is self-made. I don't accept that. But what you can't take away from people is that they're self-educated. And that is where I come from. Different mentors and big players in the game, mortgage broker. I've literally sat in the top of the shard, capital trading with a brokerage firm. I've worked with hedge funds. I've worked with big institutions. I've taught over, but even before joining IM Mastery Academy, I taught over 3,000 people globally, from South Africa to Singapore to Toronto to Dubai, all over America. And it's so important that you are always continuously accepting that you don't know everything. Nobody is self-made, but what nobody can take away from you is being self-educated. All right. So if we just look to implement, I mean, these are some of the trades on the old platform that we've just seen. Didn't realize they're on there. How many have we got? So what you'll often get is you'll get the kind of order ticket, and you can see that we have an entry, and you can start to see how minimal risk is compared to the rewards. And this is why you won't get 300 trades in a week. That's not realistic to what we do. We look to capitalize, and the reason this might help you is because you can kind of become a slightly more relaxed approach. There's very specific reasoning as to why the market moves, and that is what we teach. There is no trend line. Apologies if anyone teaches that within the organization. Do you really think a multi-trillion-dollar industry is derived on the ability of what a trend line does, or maybe a moving average, which is a delayed indicator? Raw price action dictated by systematic price delivery. I can't emphasize that enough, that price is systematically being delivered. And I'm going to show you something very, very quickly. But this is the type of thing that you can expect, that we look for most optimal entries. You can see the entry, TP1, TP2, and TP3. The stops are always giving us the highest risk to reward possibles. Like I say, 1 to 3 is a minimum, 1 to 4, 5, 6 is about an average. And then you can push into 7, 8s, and 9s, especially if you plug into the sessions as well. Another opportunity, this was only a couple of weeks ago, GJ, again, entry, stop, TP1, TP2, TP3. We're talking about 200 to 300 pip moves with often maybe a 15 to 20 pip stop. All right, next. We still got, we've got still more stuff in here. Oh, amazing. Okay, so again, another market execution. You get the time, the price, the entry level, so on and so forth. Entry, stop, TP1, TP2. And for anyone those mathematicians out there, that is over 150 pips with 30 pip risk or 40 pip risk in there. Okay, risk to reward, so important. Another opportunity, GBP AUD. All right, very minimal risk. You can see the order ticket. There is no foo-foo going on here. We don't do that. We don't sit live and tell you that we've won a trade and we don't. We come from a teaching element. Hold yourself accountable, because we hold ourselves accountable. If something hits, it hits. If it doesn't hit, it doesn't hit. Because there is always going to be another trade around the corner, so on and so forth. All right, look, amazing. So look, there is going to be losers. There is going to be losers, but even when we lose, we often win. All right, even when we lose, we often win. Market ends up going in our favor, so on and so forth. Again, so on and so forth. All right, guys. So that's kind of the stylistic ways that we like to work, breaking down each different element and just looking at kind of the market and identifying where we are in relationship to the trend is so important. Moving forward. Now, the risk to reward element, like I say, it allows you to have flexibility within the market. And I promise you, any advice that I can give to people that are coming into the industry is do things the right way from the beginning. I've been in a situation where I built an account to about 3.5 million and I've lost 2 million in a day. I've been in that situation, so I can talk from an honest perspective. That would you be in a far better position today if you would do the right things, if you work the percentages, if you work the correct compounding way, percentage compounding, rather than just trying to come to the market every single day and flip that account. You have to stay in the game. And I promise you, the longer that you stay in the game, the more confidence that you will build. The more confidence that you build, it depends on the experience that you have. How do you build more confidence and experience? Well, you have to be able to journal your trade, journal your positions, create some kind of portfolio of what you're doing, whether that's an Excel spreadsheet, whether that is the before and after type situations and before and after shots. So there's lots to obviously kind of digest there. There's lots to talk about. I will go and kind of answer some questions that are in the chat box, but I appreciate some of you are not looking to maybe utilize all of the education on the platform, and that's absolutely fine. But there might be someone on this call who's been slightly lost or has really looked for a potential to understand the market on a deeper understanding. And that is what I believe kind of Steady can do for you. And you can look to utilize that market moving forward. So I appreciate you guys having me on. I'm just going to have a quick check